iPad because the change in her vertical horizon, whatever, horizontal is not working this morning. So we will just make do. This is live. We've got to talk about the inflation shocker. Yes, folks, I don't know if you saw it already this morning, but CPI, the first of three inflation readings for the month of July, actually June data reported in July, came out this morning. And CPI inflation is once again better than expected. I don't know if you remember last month, but last month we went 4 for 4, where headline month on month, headline year on year, core month on month, core year on year were all below expectations. And folks, we did it again. Headline was expected to come in at 0.1 month on month. It came in at negative 0.1 or negative 0.1. Headline year on year was expected to come in at 3.1. It came in at 3.0. If we look at core month on month was expected to come in at 0.2. It came in at 0.1. And rounding out the 4 for 4 once again, core year on year was expected to come in at 3.4, came in at 3.3. So again, folks, it looks like inflation readings are coming in soft. Again, I want to apologize for the little bit of a shaky screen. Usually when I do these, I'm able to change the orientation, but YouTube wouldn't let me do that this morning. So I'm going to make do with what I have. Next up, we should talk about jobless claims, because on Thursdays, we also get weekly jobless claims. We have seen this number for the last 6 weeks be above 230. And folks, it came in lower than expected. It came in at a whopping 222,000, down 17,000. So again, that was weekly claims. What does this all mean? Well, if you look at the bond market, the 10-year note undoubtedly is down today. I haven't checked in the last half hour or so, but it would not surprise me if the 10-year note is down double digits. We're talking 10, 11 basis points, not 0.01, but 0.1, 0.11, something like that. On top of that, I suspect that the odds for a September rate increase by the market, FedWatch, is going up. I want to stop and actually talk about that for a minute. Because again, I think the market has been wrong about the Fed, about Powell for a long time. Going into this report, the odds of a September rate cut, last I checked, were 75%. I suspect after this morning's light CPI reading, the fact that we are now at 3, solid 3.0 on headline, you might see a lot of folks say, hey, we're winning the battle of inflation. But I would ask you to remind you to look at the job market. The job market, you and I think, is weakening, but to Powell's line of sight, did the weekly jobless claims coming at 222 give him pause? Also, I do believe Jerome Powell does not want to be political. I think the chances of a September rate cut, because the November election is around the corner, are reduced. And most importantly, something that I have shared with you for quite a while, I believe Jerome Powell wants to break the Fed put. And what have I always said about the Fed put? What does that mean for Jerome Powell? He is going to go one meeting longer than would ordinarily be necessary. So again, folks, I am staying pat, even though the market, the powers that be, disagree with me. They are all now likely piling into a September rate cut. I wouldn't be shocked, frankly, if a July rate cut odds went up. I think that's wishful thinking. I think that's the market, saying, hey, we're going to the moon, all of that. But, as always, we will see. And if we're right, we'll celebrate. And if we're wrong, we will wear that swing and a miss shirt, because I have no problem being wrong. Other things that I noted going into CPI that I was looking at shelter, medical services, and auto insurance. Those were the three that I were going in. These are the three that have been sticky. This has been a problem. It looks like shelter is finally rolling over in a meaningful way. Shelter, I think, peaked at 12%. It is now down to 5.4%. Again, continuing to go down. More on shelter in a minute. I have some more data on that sort of actuals versus Fed calculation. We also have insurance. Auto insurance was a big one. Auto insurance up 19.5% on a year-on-year basis. So again, folks, 19.5%, that is still very, very significant. And then healthcare was, or medical services was up 3.1%. I did note that used cars and trucks were down 10%, to talk about true deflation. So again, folks, remember, I'm sorry about this view. It's probably a little shaky. It's not my normal, but we go live and we just roll with the punches. YouTube wouldn't let me change from vertical to horizon. It wasn't even an option this morning. So somebody did some update at YouTube and frustrated me. But anyways, we will make do. Again, Powell, again in front of the Senate, said that the economy is no longer overheating. Some people are reading Powell's testimony in front of Congress, the Senate, the House, as being slightly dovish. Again, I don't think Powell wants to put a date on anything. He wants to be data dependent. He knows he's playing for his reputation. He knows he is in his last term. I think after the presidential election, there is a good chance that either candidate will ask Powell to step down. Again, I think he is in office until 2025. He will not be coming back, is my personal opinion. Folks, we've been talking a lot about housing, and I want to thank all of you for giving me some information. Recently, you and I have talked about stale listings. I got some great information from Danielle Fountain out of Austin, Texas. Folks, this is the kind of stuff you should look at in your buy box. Folks, remember my thesis. Yes, supply is going up, but we are starting to see increased stale inventory. What does stale inventory look like? Well, Danielle did a great job of showing us. Let me give you some data. There are 342 homes in Austin, Texas that have days on market over 200 days. Do you know that that equates to 10% of all active inventory? So folks, there's a lot of people talking about Austin, Texas and the huge spike in inventory. I want to ask you just a logical question. If 10% of the inventory has 200 days on market, is that just a seller being difficult? Is it stale inventory? Should it be counted? I don't know. I will let you be the judge. But on top of that, Danielle went one step further to prove the point of stale inventory. Again, remember, folks, 342 homes in Austin, 200 days on market. Did you know that 85 of the 342, or 24%, have had zero price reductions? Think about that for a minute. You're a home seller. You have been on the market for 200 days, and you have had zero price cuts. Are you motivated? You and I both know the answer, but for the folks in the back of the room, no, you are not motivated. You are one of those sellers that say, hey, if I get my price, I sell. If I don't, I will stay put. How about 66 of them, or 19%, have had a price reduction of less than 5%? Folks, this stuff is going on around the country. This inventory will eventually be an expired listing, it will be withdrawn, or it will just be ignored by the masses. So again, stale inventory is really distorting the numbers. Also, as we've talked about before, I think it was Lynchburg we talked about yesterday, 1/3 of the active listings are below the median, 2/3 of the active listings are above the median. So you could have lots of price drops on above the median and still yank prices higher. That is unfortunately how math works, even though the crash bros and doomers don't seem to like it. Delta Airlines missed top line, missed bottom line, gave reduced guidance. Is the consumer finally tapping out? Little tidbit from CPI this morning. Airfare down 5%, negative 5%. True deflation in airline tickets. Let's talk about shelter. We talked about that for a minute. Shelter is the last leg to bring CPI down to the 2% target. We have done the math before. I have not done the math this morning, but I will shortly. If shelter is still being reported at 5.4%, we all know by now that shelter is a lagging indicator. It's a 12-month rolling number. You guys remember all of this from past discussions. Actual Q1 shelter was up 0.4. So if you correct for that error, you have CPI, I'm sure, at or near 2%. Again, remember, folks, housing is the largest contributor to CPI. It is 36%. So let's just call it 40% between friends. Let me do the math real quick in my head. So reported 5.2, actual 0.4, that's a delta of 4.8. So if we take that out, 4.8 times 0.4, 96, what would that be? 192, so that's almost 2%. So think about this, CPI at 3%, let's remove 1.9 from that. We have CPI headline at 1.1%. We just did that quickly. I could be off a little bit, but you get the point. If shelter was reported in real time, which, oh, by the way, we have the data, don't know why the Fed hasn't changed their model, we would already have CPI, we would already have inflation below 2%. So pretty wild to think about. Next up, we also got some more earnings from PepsiCo. They missed on revenue, beat on earnings. Remember, folks, you and I are interested in revenue. As we transition into perhaps a slower economy, perhaps a recession, watch revenue. I was an accountant. I sat in these meetings and understand that you can make, I don't know, how do I want to say this? You can make business decisions that impact earnings in a positive or negative way every quarter. I think earnings is a little bit of black magic. You can't fake revenue. So watch revenue. All three business lines of PepsiCo in North America reported declines in volume. The CEO said the consumer is being more value conscious. So again, I think we can look for more sales and coupons and things of that nature. On top of that, we got Costco. Costco, I don't know if you're a Costco member, but unfortunately your membership is going up either $5 or $10. It is the first hike in membership since 2017. Folks, in the school community, we have so much stuff going on. We are on our way to 200 school members. I can't wait to get there. I think we were about 12 or 13 folks short, so join, get us over 200. We had our second weekly accountability group. Again, this accountability group occurs in the evenings. I think it goes off at 6 o'clock. It is available to all school members. The accountability group lasted 2 hours and 52 minutes. Shout out Frank at Old Guy REI and all the others who joined. You talked about Cody's seller financing fourplex, talked about home insurance, house hacking, out-of-state investing, and so much more. Folks, trust me, if you're stuck, if you're trying to figure out how to do the work, join the accountability group. Second, if you join the accountability group, you know, it's okay to be a fly on the wall the first time, but trust me when I tell you these folks don't bite. They are not out to sell you anything. These are just investors looking to help and move forward. They are just like you. So join, introduce yourself, tell me your buy box, ask your questions. 2 hours and 52 minutes. Shout out Frank at Old Guy REI. Also remember today, oh, this ought to be a good one, folks. Woo! This one session today is worth the $20. That's all it costs to be a part of the school community every month. You're going to get the chance to talk to Lance Lambert. We're going to go for an hour. My hope is all of you get to ask about your buy box, your state, your city, really what is going on. Lance Lambert, Resi Club Analytics has the data, has all the information. I can't wait for all of you to just see what he has there. So again, folks, that's what I have for you today. Join school. If you want paint by numbers, you want to do it yourself, you want a $200 bonus, you can, of course, buy the course, How to Get Started One Rental at a Time. Link below. It is only $3.99. Thank you so much. Thank you for sticking with me. I don't know what happened with YouTube this morning. I had to hold this in my hand. So I'm sorry if it was a little shaky, but we do what we do. All right, take care. Bye.